Good afternoon, everyone. My name is Luis Rodriguez. I am the Director of Franchise Sales for Unique Wax Studios. I'd like to be the first to welcome you on our first financing webinar. It's not our first webinar, but it's our first finance webinar on financing your first franchise. But obviously, we're going to talk about a little bit more than that. Our guests, our panelists today, is Travis Hardy, Vice President of Sales for Ascentium Capital. How are you today, Travis?
I'm great, Luis. Thank you. Thanks for having me on today. I appreciate the opportunity.
It's really good to have you here, Travis. We're excited. This is a topic that's near and dear to a lot of people. I personally run into it continuously because people love the Unique Wax Studio franchise. Whether they're customers, whether they're investors, they go, this is great. But in some cases, they say, gosh, I want it, but I'm not where I want to be finance-wise. And so that's why I thought that you would be a great resource for this. So welcome again.
Thank you.
I'm going to just get right into it. Tell me about your company and about you.
Okay. Well, first of all, I've been with Ascentium Capital for about 2.5 years, and my experience prior to joining Ascentium Capital, I worked for several banks, and in their lending on the business side, the commercial lending side, and I've been doing lending for about 15 or so years, and Ascentium Capital is I'll try to make it as brief and as short as possible. We are the nation's largest private independent equipment financing company. We're backed by Warburg Pincus, so we have our own capital. And one of the nice things about us is that we allow a lot of customers to be able to do financing outside of their bank. So whenever you think of a bank, we're a little bit opposite. We'll take second position on a lot of deals and some transactions. Last year, as a company, we did well over, I think, $1.2 billion.
Wow.
At new origination fundings. So I'm excited to be here. We love the franchise industry, and that's kind of what my specialty is within the company.
Excellent. Well, gosh, I'm really glad it's you that's here then. So when you're looking and someone approaches you and you're considering them as a possible recipient of funding, what sort of profile do you look for in the kind of people that would qualify for their first Unique Wax Studio franchise? You know, cash on hand, credit, net worth, marital, work status. What kind of things do you look for?
One of the things that we look for, first of all, is you need to have some capital on hand, because most likely you'll have to, similar to an SBA lending. Again, when I opened up the statement at the very start, you have a bank and then you have what we do. Most banks require, like an SBA loan, 20% upfront. Normally, we won't require as much of that as far as on the lending side. One thing that we look for is do you have capital, money to put into it on your own downstroke, because we want to make sure you have some skin in the game too. We also obviously look for some type of if you have a history maybe in owning or running your own business, maybe it's a different type of industry.
You don't necessarily have to have a history owning and operating a waxing franchise. It can be
That's correct.
From other things.
That's correct. That's
okay.
Correct. Yeah, you can have other history on that side. As far as like your marital work stat, we don't, that's your personal life. We don't care. When you brought that up, and I said, well, wait a minute, that doesn't matter to us.
Okay.
Our interest is,
so people know, gosh, should I be married or?
No. You know what? Can you run a business? Have you run a business before? Have you managed employees? Do you know how to work a budget and things along those lines? Some of the I guess common challenges that a lot of the people face, when they're trying to get the funding, is there's a couple things. A lot of times people will go to their bank Okay, and if you go to your bank, you have your traditional lending and funding, lending that you might do, personally. Some people will take out it's like a second mortgage on your home, or some people will go SBA lending. And what we're able to provide is something totally different, because one of our collaterals is that we don't take your house up as collateral for lending.
Okay.
Okay, as similar to like your traditional your bank will. If the deal for some reason doesn't pan out, over time, you can go home. You can go to a house.
Okay.
The other
You don't
aspect,
have to
I'm
live in
sorry.
your car. Okay.
Yeah, you don't have to live in your car for the next 2 years until you pay it up. Yeah, exactly. The other nice thing that kind of separates us from a lot of the lenders and the banking side is that we have a little bit of a wider credit window.
What does that
And
mean?
what that means is that when you look at your FICO scores, you look at your maybe there might be a lien that appeared, but it's been satisfied. A lot of banks, if a lien appears, they don't want any part of you. That means you had a little bit of hair or a little bit of dirt on your credit in the past, even though it could be a tax lien from 4 years ago, 3 years ago, 2 years ago. Okay, and it could be small. It could be less than $5,000, but everything. We will look past some of those things, not everything. I mean, I'm not going to make a general statement saying that if you have these things, we're covered and you're guaranteed to get lending from us. We just have a little bit of a wider credit window.
Okay.
Your FICO score is probably a little bit less than 750.
Okay.
And so we're there in that front. It's to answer your question, it varies a little bit. We have a wider credit window. We're not a bank. We are our own lending. We have our own department who does our credit analysis, and we have a quick turnaround. Most of our transactions, you'll get a credit decision within hours or a day instead of weeks or a month.
Okay. Now, what about things like net worth? You look at that?
We will look at that sometimes, depending upon the dollar amount that you're looking to finance. What we look at sometimes is, do you have cash on hand to put in as collateral? When you do your personal financial statement, we will look at that. Is there a certain percentage that we look for all the time? Not necessarily, because sometimes it depends upon. It's a kind of a moving target, because we look at your personal score. If you own a business, or you run a business, we look at your business information. So there's a lot of different variables that go into making this credit decision. It's not always just black and white.
Okay. Now, it sounds like from what you're saying that you look at every candidate on their own merit. You don't have a cookie cutter approach to this.
That is correct.
Okay.
That is very correct.
Well, I like hearing that. So what are some of the common challenges that people face when they're looking to fund their franchise?
Some of the common challenges is I find a lot of the franchisees may not know exactly what their dollar amount is. They're not organized enough to do it's kind of sources and uses. There's a form that we ask you to use to say, how much do you plan to spend where, and where do you think you're going to get this money from? Some of the people have a tough time organizing all of that. So part of my challenge is getting the future business owner to have a business plan, to know what they're going to be doing with the money, to have everything laid out up front so we can talk quickly and concisely to say, hey, look, we can do it. Now, the other nice thing about our company, I'll interject this, is that we have, I guess, lending relationships, as you should say, with other lenders who may not fit our bucket. So a lot of times you can possibly send us some information, financial information, and we may not have an appetite for it, but one of our fellow partners will. So, you can still.
So especially
What's that?
First-time franchisee front.
Yes. Yeah. If you're a special first-time franchisee, I may not be able to handle it in my department, but I might be able to refer you and have someone based upon our lending experience, be able to place you with a lender that might be able to provide you with the type of capital that you need for your company to start your company.
Outstanding. Okay. All right. Um, so if you're a first-time franchisee or a small business owner, what's the most important thing you should know when you're applying for financing?
The most important you need to know is know your business and know how much you're asking for and when and what's going to be the structure of it. Our company, we will finance, and I, most of Unikay Wax, as my understanding and my experience with this is that most of these lendings aren't going to include land and or building. Those two things we do not finance. So my biggest struggle is to have the franchisee or the customer know your business, know how much you're going to spend, know where it's going to come from. Know this up front, or guesstimation. I mean, most times you should be able to tell probably within 10%. There's going to be a fluctuation. It's not going to be exact dollar, but 10% window of how much that you're going to be looking for.
So going back to a point you made earlier, and I feel this is very important, and it's something that we really work with our franchisees on, have a business plan. Know when you're going in, where you're going. This is not a Hail Mary. This is something that you really want to have an idea. Well, this is about how much it's going to take to open. This is how much it's going to be to get to break even. All of that stuff. We can work with you on that, but you have to be willing to do that work.
Yes, correct.
Okay.
Yep.
All right. So what are some of the types of funding available for first-time business owners or franchisees opening their first location?
Okay. Most of there are different types of options that we offer a plethora of different types of lending programs. But if you're a first-time operator, or you're an operator of another brand and you're just coming to join Unikay Wax, all right, you will understand that there's like an equipment financing agreement. In other words, it's all the FF&E, the furniture, fixtures, and equipment. That's the construction costs and all of those, services and hard items that you need. We will finance those. All right. So that's one of the price we have, and you can generally we'll go 5 years, maybe 6 years, depending upon the credit, or less. All right. We don't, because we're not a bank or an SBA lender. Again, we don't carry things out for 10 years. Because most franchises, if you've researched this, that most of the concepts out there, and we work with over 100 some different concepts, you're going to have to re-image or remarket or re-beautify, I guess, use a word, your location. Within 7 years, 7 or 8 years, because otherwise you're going to look dated. And so we carry it out to who wants to finance, their reimage, their remodel, or just starting their business for 10 years, knowing that you're going to have to reimage it in 7 years. Now you're paying 3 years on something that you're not even using, that's gone. Those machineries, the POS system's gone. These things, this piece of equipment's gone. You have the doors, the paint is gone that you're still financing for, 10 years ago. So that's why we carry it all, so it's all compact. So you get your value and your money's worth.
Well, and that's a really good point, because one of the reasons why people will look to a franchise like ours is that we're constantly innovating. We're constantly making sure that we're not dated. We rebranded and about the end of last year, so that our studios now look like spas. And people want to go to the nicest, latest, greatest, because think about it. Well, I like going to XYZ waxing place because they look like they looked 20 years ago. That's not the way it happens. No. No. I'm not going to go to grandma's house to get a wax right now, That's for sure. So what would you say the most common type of funding for first-time franchisees would be?
There'll be twofold. Depends on what category you're coming into. If you're a first-time franchisee and you've never owned a business, the most common, which you probably will run into, will be some type of traditional loan, or an SBA type loan. All right, we will that very first time lending is something that we do offer, but it's a smaller window. So it's not as broad as those. However, with that being said, if you have an SBA loan or a bank loan and you wish to refinance that, okay, over in the next like 2 years or 3 years, we can come back and we could possibly help you with that. We do refinancing also. So some people will get started and they get, but they don't like the terms, because most SBA loans or bank type loans, they're adjustable rates, and then they get adjusted or reset every quarter, twice a year, every 6 months, or annually. So, and all of our rates are fixed through the entire process, so you know exactly what you're going to be paying at any given time. Plus, we don't really have closing points like 2%, 3%. Whereas a small nominal processing fee, it's a one-time only, and it's usually probably less than $1,000.
Oh, that's good to know. That's outstanding. So even though your window and your specialty may not be SBA, you do conventional. You do,
Well, no, we don't. We have relationship people who do conventional loans. Yeah, we have a loan department, but our conventional loans will probably not be in the $300,000 to $500,000 that you might be looking for. Our traditional loans will probably be a little bit less than that.
So again, Travis can refer you to the type of partners that we can deal with. And if for some reason you're still having a challenge finding that person, talk to me. I might be able to know someone else that I can help you work with. But I think Travis and the size of his company, the strength of what he does, is certainly an asset for people who want to get into financing this. And so here's kind of it's a tangent of a question, but it's definitely related. So what happens if someone wants to buy a resale franchise? I have a resale location in a part of town, and they've already built it out. They've already done, everything to it. And all that might be required is for a renovation, for the rebranding, for something like that. And it's a really appealing thing for people who are considering a franchise, to be able to purchase something that already has a client base, a customer base, that already went through the lion's share of that initial expense. What can you tell me about financing for someone who's interested in acquiring an existing operation?
Okay. We can do financing for, in a sense, that's kind of a new acquisition. You're acquiring an existing location. We'll obviously need to get information on that current business. And one of the things that we like to do, because we are more of a cash flow lender, not just a credit lender, that's the reason why our credit window is a little wider. Your credit may not be where banks or someone like that would like for it to be. However, because your business is making money, we lend on your ability to make money. So we do offer the ability for you to purchase an existing location, and sometimes that can be a little bit easier because that location has a track record and a history. And we can use that to strengthen the process and strengthen the ability for you to be able to finance that location. We also do partner buyouts, where if you're having an issue where there might be 2 or 3 partners, and we do this across our different brands, where you have 2 or 3 partners, and one of the partners wants to leave or divest. Therefore, you know what? The other 2 are going to buy the third one out. We offer that type of financing too. And the one thing we don't do, I will let you know this, that we get asked this occasionally, we don't do hard money financing. In other words, taking money out of one business to finance another business, in a sense, the equity, like what your profits are at one location to finance another. We don't do that. That's more of a different type of lending. I just want to let you know that.
Sure. I just mentioned this because and this is a growing line of business. We believe in helping our franchisees from start to finish. So obviously we're going to help them get into a Unique Wax Studio franchise and what
Hmm.
with the help of someone like you or with their own money. And then they're with us for 5, 10, 15, however many years. And at one point, they're going to say, well, gee, I now want to throttle back and enjoy the fruit of my labor. So to help them sell their business, we have a resale division.
Yep, that's
And,
correct. Yep.
and we will help them find a potential buyer for their business. We just sold one this week.
Yep.
Here. And that's very desirable for a lot of people. So this is a really helpful explanation you're giving us. So what are the benefits of funding your business with a loan versus self-funding?
Well, the cash flow, basically, cash is king, and cash on hand. Um, if there's an adage where some people believe that letting other people money build your business is an advantage of using your own money. However, you need to look at a couple different things for how you want to run your business. Using other people's money to run your business leaves more cash on you to grow your business, for employees, for payroll, especially if you're just starting up. If you have more cash on hand, because there's going to be some growing pains, like throughout life, you're going to be cutting your teeth in that industry, and during the time where you're cutting your teeth, the more cash you have available, the easier it is for you to make decisions and so forth.
Oh, okay. Now, what are downsides though? Would you say?
I'm sorry?
What are some of the downsides?
The downsides of financing with us, one is, you're going to be held liable to us. It's kind of the lender, the lender is slave to the buyer is slave to the lender. There's a saying that maybe talks about is the person who has to borrow the money is a slave to the person who lent them the money.
They're going to be in
So in
debt.
other words, you're in debt to them. Okay, and some people have adversity to debt, and that's understandable. However, you can possibly manage that debt too, depending on how much you want to put in. Therefore, like getting back to your very first question is, how much equity do you want to put into this, and how much do you want to keep out of it to hold so you have your own cash on hand? So you are in a sense tied to us. We want you, we want your business, but we're also going to be tied to us. That's the only downside that I see.
Okay, well, that's you have to expect that Ascentium will want to get their money back at some point.
Yes, exactly.
So yeah, I kind of get that. All right. So at what point should someone begin to consider finance options or start the loan application process?
You can. I think once you get your business plan together, once you know exactly what you're going to be doing, how much you're going to be spending, or close to it, within $10,000-$15,000, you should be able to kind of guesstimate where that $15,000 heavy or light, which is like a $30,000 swing. That's a lot of money when you're starting a brand new business. You should be within that swing. I just lost my train of thought. I did. What was the question? Sorry.
Station. Okay.
Oh, when you be in, yeah, you need to have your budget together. Start the application probably a little bit earlier than later, because one thing that has an application, even though we generally have a quick turnaround, like if you're a current business owner and you want to re-image a location that you've owned for a year or two, or for 2 years, or 18 months or 2 years, you can go up to $200,000 with an application only. You don't even need to send us financials. All right. So that's a wonderful benefit that we offer. And we do that across the board with a lot of our different concepts. So you need to start the process early You need to get your business plan together early, and then start talking about ways that we can get this going. Because again, we may not be the exact answer for you, but we may be able to position you or partner you with somebody who can. And if we can't, there are different ways that you can go about get that financing, and I'd be happy to talk to you about that.
Awesome. Okay. So how long does it typically take for funds to be distributed? So when do I get my money, Travis?
Okay, when do I get money? Well, first of all, most likely we wouldn't be giving the money to you. We would be giving money to your vendors. Yep, to your suppliers. Most of our deals, we pay them up front many times before the equipment vendors need their money before they even deliver it. Contractors need to get paid up front because they have expenses they need to do all of the build out and the FF&E and all the furniture and the fixtures, putting the fixtures in and so forth. That turnaround process, once you sign, we get all the equipment together. You remember, you know your plan, you know your business. You send all your invoices, quotes. We put it all together. You sign an agreement to, in a sense, pay us back using layman's terms. At that point, once we receive that, usually within 24, 48 hours, the funds are sent electronically to your suppliers and vendors up front before it's completed. A few cases, there might be a situation where we'll have to wait to the very end to refund, to pay your vendors. And many times if you have cash on hand and you really want to get things moving, talk to us again about it ahead of time. We can sometimes refund or re-give you the money back that you already paid your POS or your security vendor. We can refund monies back to you. So you can kind of get the process started. So it's very flexible. But it's a very quick process as far as when the money has been. Generally, we don't write checks out any longer. Everything is sent electronically.
So and I'm trying to get a sense especially for our people who are our attendees here. So let's say that they're good, they're diligent, and they submit their application. They give you everything that you request, because I know companies like you want information.
Yeah.
And it's logical, right?
So timeline. You're looking at a timeline?
Yeah. What kind of
time? Okay. The timeline that you're looking at, once we get all the information for your application, we'll give you a credit response, and it's, say, over $300,000, $400,000. You'll get a credit decision probably within 48 hours. 48 hours or 72 hours. And then it'll be either approved, declined, or we need additional info. All right? Every time you send us information and usually if we ask for additional information, we'll get enough information on that first request. We'll be able to make a decision, either approved or declined. It goes pretty quickly. But if not, we may need, every time you send us information that may not be clear, that we may not understand the history of how come you had a hiccup in 2015. I was running through a personal family issue, and you explain that issue to us, and we can sometimes overcome that. But once we get that approved, the documentation or the contract agreement, is what we should call it, the agreement will be emailed to you probably within a couple days. 48 hours, 72 hours, 2 to 3 days. As soon as it's sent to you, it's sent electronically. You complete it and sign it electronically. You send it back to us. At that point, we should have everything in place to start funding your vendors probably within 24 hours from that date. So you're probably looking at, a couple weeks, week and a half, 2 weeks, something along those lines.
Wow.
If we have but again, we have to have the information.
That's not well, sure. I understand.
Yeah.
That, but that's quicker than what I had in my mind.
Yeah. Banks are traditionally a month before you get an answer. 2 weeks before you get approved, declined, or we need additional info. Ours are days.
For sure. Now, how is the financing process for franchisees' first location different from that for additional units? So let's say I I just got my Unikay franchise. I just signed my agreement and I gave you everything, and you just gave me an idea of what the process is. But I'm kicking butt. I'm doing really well. I'm liking making money. The business is going well for me, and I think, I see another location where I think I could do well. I'd like to get a second franchise. And of course, I talked to Luis, who is delighted that he.
Oh, I'm sure you're excited. Yes,
I'm loving that. But what's the difference at that point? How does that vary?
if you're looking at if you're going on to your second location after your first one, we would like to have a history, usually of 6 months or so. Just a history of payments, see where you're at, your current and everything is flowing in a positive way. And then what we will do is we'll, again, know your plan, know what how you're going to be spending, what you're going to be doing, and what you're asking for. And once you do that, you're going to be sending us some additional financial, because we'll look at information on your current location, okay? And we'll obviously look at your other, in a sense, a global picture of your financing at that point. You know, how's your business globally working? If you own other concepts, we'll want to look at those other concepts too, to make sure that, you know, some other concept you're killing it in Unikay wax. However, another concept that you have for some reason is not performing well. We'll want to look at that other one, because we want to make sure it doesn't bring down that Unikay wax that we already have an agreement with is going to put that in jeopardy. Okay.
All right, that makes sense. So
about 6 months, a year is what you might be looking at.
All right. That's a really good answer for that. So at this point, Travis, I'm going to open up the floor to questions from our panelists.
Great. Okay.
I know who you are. I know who a lot of you are. And please, on the Q&A button here, please feel free to ask any question. We've got the man with the plan here. So ask him, and also know that at the end of all this, I am going to make, and hopefully put it on the Q&A part, make the Travis's contact information known. So
sounds good.
So panelists, bring it on, unless he did such an amazing job. Oh, here we go. We have a question. How do your interest rates compare to SBA and other traditional loans?
Okay. Our rates, first of all, our rates traditionally, I'd probably say 90% of our, because we offer many different products, most of our products are equipment finance agreements, so it's not a true rate. But to convert that rate, that interest into a rate for an SBA loan, we're usually better than an SBA, because most SBAs, you're going to have prime plus how many points, which is like 2 points or 2.5, 2.25. And if prime right now is at 5.5, add 2 to that, you're at 7.5, maybe 8. We're going to be usually underneath that, a little bit better than that. Plus, you won't have a lot of the origination fee and upfront costs that you'll assist for that. The traditional loans, now, if you have just a straight traditional loan through your bank, then they might be better than us. We may not be the option. However, with the bank, you might have restrictions, covenant issues, where it talks about other lending that might come up. With us, you know, we don't generally have that. The term, like I explained earlier, some banks will go out further. We won't go out any further than 6 years, 5, 6 years. But we're very competitive on rate. But the big advantage is this: we don't. You have to factor in sometimes 2%, 3%, 4% origination fees and points. We don't require that. If you were to add those points in on our rates in our program, your monthly payment would most likely be less than what you'd have at that bank.
Wow. Okay, that's very good. The other question that I have, Can you repeat what sort of lending options are available for first-time franchisees?
Okay. Different lending options are available. Thank you for asking that question, first of all. One is you have your SBA lender. That's traditional. That, you know, and as you know, an SBA is a kind of a government-backed loan that's run through your bank. All right. That's one option. Another is a traditional lending. You go to your bank, you let them know, and it depends on the dollar amount. A lot of that depends on what your personal account looks like. Some people also take out equity, like out of their homes, their property, things along those lines to get that. And those are, anytime you take an equity, that's going to be a variable type rate. With us, you know, if you're a first time lender, a lot of it depends upon what you're currently doing as a business person. You know, it's not a cookie cutter. You know, do you own another business? Have you ever run another business? Those types of things. If you were involved with, like, say, a franchise in another industry or another concept, and you divested from that and you wanted to start a Unicade location, that is something that we could definitely look at, and we would cover that for you. That would be something that we would have an appetite for. So really, those are like the 3 or 4 different options that you're looking for. And again, I can help you. If we can't help you, most likely I could probably refer you to somebody else to help you in those other channels.
So really, you talked about 2 options. You talked about a traditional
Yes.
program and SBA. Those were the 2 main options you discussed,
correct? Yes.
So, what can I hear SBA, and I personally, because I'm in the business, am familiar with it. Can you at least conceptually tell us about SBA?
Okay. Well, conceptually, SBA lending is the government
administration.
I'm sorry, Small Business Administration, which is a federally run organization. Now, I'm not an SBA lender, so I'm not going to say that I'm an SBA expert at that. My division, and conceptually, the SBA lending, it's a lending that's backed by the federal government. And what they do is, like, for every dollar that you borrow, the government will back a percentage of that. Let's say 50%. It depends on that lending. So the bank's risk is much less, because instead of them lending you $100,000, they're only looking at really, truly, their vested interest is only $50,000. And usually with the SBA lending, most likely you're also going to have to open an account with that bank. All right. So they're going to be taking money in. They're going to be taking in $50,000 in a year. Let's just say that. Well, just hopefully you get more than that on this $100,000 loan. You're going to be taking in $50,000 in your deposits. Okay. And we're going to be lending you $50,000 in deposits. Okay. And most banks would love that. And we're going to get 3% on top of that. Okay, on that loan, because remember, our vested interest is much less. It's only $50,000, but it's based on a $100,000 loan, because 50% of that $1,000 comes from the government, $50,000 comes from that bank. All right, so your payment's built on that. So if I was a banker, I would love that. And that's the way that it should work. That helps the new businesses come in. So, and with an SBA loan, as you know, as I said earlier, the repayment on that is a variable rate. It's not a fixed monthly payment. So as the interest rates go, as goes your monthly payment, up or down accordingly. Okay. All right. SBA loans, you can pay them off. Well, it depends upon you need to check with your type of bank. A lot of those you can pay off early. We can pay our options off early too. There's no penalty. In other words, you don't have to pay the balance of your monthly payments. Like traditional leasing, normally you have to pay off the balance of all of your monthly payments. What it would be, all of them combined, they would total X amount of dollars. What we do is we say, no, it's going to be less than that. It's going to be, we look at the interest and we back that out. Usually not the entire interest, but it'll be a small portion thereof.
Got it. Another question,
let me interrupt something 1 second. Sorry, Luis. And with an SBA lending, traditionally, you get the money directly. See, with us, we pay, and we pay the vendors. We pay your contractor. So in a sense, no really money goes into your hands. We take care of all that for you. So hopefully it can help you just focus on building the company, doing the right thing instead of worrying about writing the checks, who gets paid, this and that. And you're notified when the money goes out to your vendors, your contractors, your equipment suppliers, and whoever it may be.
Got it. That's helpful. That is. We got another question. And Mr. Bove, you and I are due for a conversation about this, and we'll talk about it. So first part of the question, I don't have the disclosure agreement. You and I will talk. I'll make sure you have one before the day is over. So, and all the startup costs are in there as well. So how much of the startup costs are attributable to equipment? How much are not equipment and thus not financeable? I'll get that all to you so you know what all the startup costs that we know of are. So we have, by law, we have to disclose that, and I'll get that to you, Mr. Bo. The second part of the question, and to confirm, Travis, you are only offering equipment leasing, or can I finance all expenses with you? So what's your...
We finance, when I said equipment, when I say FF&E, that's furniture, fixtures, and equipment. But when you say fixtures are a countertop. Fixtures are painting. We can do all soft cost financing here. We offer that product, if credit approved, of course. We offer that. So that's all your soft costs. That's not just your equipment. That includes your remodeling of your new bathroom set, the tiles that go in, the wallpaper, all the signs, that go out front. We finance painting in the parking lot. So it's Mr. Above. That's or Miss, whoever.
Mr.
Above. I'm sorry, above. It's hard to read on I have a really small, I'm reading off my laptop here. But, so we offer more than just the equipment. Bottom line is, we offer more than just the equipment.
Okay, all right. And Mr. Bove, I will speak with you before day's end or reach out to you, make sure you have the information you need, and I can answer the questions from my end. You bet. What other questions are out there? Let's take advantage that we have the man with us here. Anybody have any questions? Okay. This has been very helpful. Let me ask you this. So suppliers build out. Let's say I lease the shell. I'm going to set up a Unique wax studio at 123 Elm Street. I found the perfect location. I lease the shell. I understand you're not doing. I'm not building a building. It's all there. I'm leasing a.
Yeah.
You pay the contractors. You pay the equipment companies. You pay all of that.
Furniture. Yep. Yeah. We handle everything inside of that. Everything inside the building. But the only thing we are not going to cover is because most of these spaces are leased. So we will provide all of that, the cost to get that up running. And in some cases, we can also provide you a little bit of a working capital loan on top of that too, as another product, which is cash in hand to you. But usually it's not like the SBA type where they give a check or just goes right into your account and you got to even account for that money's being spent and so forth. But we handle everything inside that shell.
Got it. Okay. Any more questions, anyone? Okay, well then, that being said, I want to thank you, Travis, and
Thank you, Luis.
Well, it's my pleasure. I also
this is nice.
want to thank our attendees. I want to encourage you to reach out to Travis and talk to him. So I am going, let me see how I can do this. I am going to really try and do this, but I'm going to send our panelists, or excuse me, uh,
Attendees.
our attendees. Yes, I'm going to really do my best to send them. I have copied your contact information, and
Okay, that's
I'm going
fine.
to send it to all of them.
I see it here. It just popped up.
And
Yep.
I am going to give them the ability to contact you at their convenience.
Yep.
And
It looks like it's up here twice. Okay, nice.
well, it's to all panelists. Okay, I did it to. Okay, well, I was a knucklehead and sent it twice.
It's okay. I can contact me.
Yes. So there's Travis's contact information. If you want to do more of a deep dive about this kind of stuff, or want to find out what your situation is, or have specific things that might be private, more personal to you, that you feel you don't really want to get into in this format, go ahead and reach out to Travis. Otherwise, talk to me. I may have other options for you, but I think one of the reasons that I did invite Travis is that he comes from a solid company with a lot of banking and with a lot of backing rather, and a good reputation. And I'm really glad that he's here, and I'm really glad that all you came today. If whenever you're ready to talk about Unikay, I'll talk to you. You know, I will call you back. I'm looking forward to meeting you and talking to you all. And please have a great weekend, everyone. Thank you for being here today. And let's get waxing.
Yeah, go make some money. Thank you. Thank you, everyone.
Take
Have
care.
a great weekend. All righty. Bye-bye.